Hey everyone, this is DayTraderRockStar, and today I'm actually going to go over a little educational video, how to trade in the ES with high probability setups, and how to really improve your risk reward levels. I traded the ES last weekend, and I went into the market knowing I was going to trade the ES. So I have a methodology that I use when I trade stocks and futures, and they kind of cross over. It's basically just a tighter time frame on the ES. So we constantly, what we want to do, and each time we do this, we actually in fact do this, and that's what we had to get through our heads as traders. And for the beginner traders out there especially, you have to wipe the plate clean, wipe the slate clean. You have to relearn things. What you've been taught or what you think is probably wrong in the markets. That's why the markets work the way they do. They tend to take out the people who follow the aggressively follow the crowd, and the market has a way of just understanding that, and call it whatever you will, this inner science that predicts these type of things. And not even to get too mystical on that, the market has a method, it has a trend, it has it definitely has a way about it. And when you look back at the market last week, you definitely see that we're in a channel. So all you have to do basically is recognize that and believe it. All right, the belief and having confidence in the trade is so important. Without that, you're still always going to be double thinking yourself. And if you're double thinking yourself and and not confident going to a trade, you shouldn't go into the trade, because you can't survive that way in the markets. You need to be confident. So what I do to gain my confidence is I don't try to find the trades and let the trades find me. First of all, I take a step out, take a look at the markets. Doesn't have to be I had to make that trade in the first half hour. I let things set up until all of a sudden, even 3 days, 4 days into the week, it took to really recognize the channel here. Because if you waited the first 2 days, you really couldn't. The third day, but once you started seeing this double, this top here and the trend line, you could actually then see 1, 2, 3, 4, 5 points. Then you knew that 6 point was a good shot to trade off of, and that was an excellent thing. So as that price comes down there, it's easy enough as an active trader to monitor that, and when that does happen, you end up taking your position into that. You already have taken the risk out of the trade, and other than trying, maintaining that chop, if you get in here and it chops a little lower down here, the problem is you have to deal. The market knows that if you get in here, most people are going to get out if it fails, and then it reverses. So it's just a matter of understanding that level, put that box around that level and say, I'm in here, I'm still in here because it's in my box, it's in my comfort zone. Your comfort zone there has to be some slack in your stops on the ES. And from that point on, you get your move, and you scale out into your move, into strength, and you wait for your next setup. And the next setup is just basically designed on a set of indicators, your oversold stochastics, which tend not to work as well on the 1 minute chart, but really the trend lines, the moving averages, the recognizable patterns, support and resistance lines, and and when I say recognizable patterns, that's what I'm really queuing in on. So we have the channel, and I know if we come back down this way, my risk reward is getting better and better. So at this point, you could actually start looking to take that other trade. And you remember, this is we're doing this on the fly, so these trend lines could adjust. They could be a few dollars off one direction or another. So you have to, when you give yourself an entry and you're looking at an entry, you really have to give yourself that slack level we're talking about, that area of maybe it's not right at the trend line. It's got to be something like around the trend line. It has to be something like you have a little deviation on both sides of the trend line to the downside. And that's the only way you're really going to be successful, because other than that, the market's going to chop you up. There's no one's going to sharpshoot this. I mean, you sharpshoot when you start to micro scalp and stuff, but at these levels where you're trying to gain 2 to 3 points, you're going to have to sometimes give up a point, and you have to feel comfortable with that. That's why it's so important to recognize these patterns. And that one method, which comes out really important, I'm actually going to continue to go through this chart, because then on Friday that was let's see what this is. This is going to be Friday. That was Thursday. This is Friday now. Friday there's another, and this is what I do here on Day Trading Radio. What I do is I have this ES chart up. All right, and once I recognize this, I'll start boxing out. This is what I do. I box out each before they happen. We're saying, all right, Now we have these 3 points. We're going to, we see this price coming up here. I'll put a box in there. I said, watch for that level to be an area of interest. This is a good risk-reward trade to the downside. This is already, because we have 1, 2, 3, I put this pattern in here, and I think I actually took this trade off of this level, off of number 4. And we again moved back up. Then it was a double top pullback, and then we was looking for a downward channel, explaining how the downward channel forms, and usually it's a break to the upside, and you look for that halfway pullback into the channel, and corresponding with the stochastics down here. It all has a method, and to really be successful as a trader, you have to go more by the method and less by the emotion. The emotions will get you. Another thing you have to remember is you're not supposed to hit 1,000. It's okay to to bat 300, 400, 500. Long as your risk reward is properly managed, and your management, because it's not about how many times you get into a stock. This actually brings your percentage up to be successful as a trader overall. So I would never even expect. I would expect if you took each one of these positions, you would have 70% of them would work out. 70% of them would work out of a recognizable pattern. Easy. So you're already up to that point. So you just have to be able to deal with recognizing it first off, knowing where the next, how many times you're going to be able to trade it before a pattern breaks out or breaks down. So you have to recognize that. You have to, plan your trade out well in advance, understand it, feel good about it, let it ride, take it off, move to the next one. Very important. Anyway, that's it. I just want to go over that. This is the trades we did this week and why we took them, and I just want to stress the importance of, instead of getting caught up in the chop of the trade, let the trade come to you. Recognize your patterns. Listen to the station. You'll see the patterns being drawn out. You'll know where all the higher, the higher reward areas are, the lower risk areas are. Enter. You'll see us take those trades live. All right. So that's DayTraderRockStar here at DayTradingRadio.com. Broadcasting live each day from 9 o'clock till 4 o'clock total market hours. Come on by.